Hey, what's up, my friend? So in today's episode, right, I want to talk about how much money, right, should you start with Forex trading. Okay, so now before we go into that topic, right, I want to share with you a very important thing. Number one, if you are in debt, right, if you have immediate loans to pay, if you are currently chased by a loan shark or something along those lines, right, don't get into Forex trading, right? Forex trading is not like having a job, right, where it pays you consistently every month. In fact, any type of trading, whether it's options trading, day trading, swing trading, whatsoever, right? It is not a job, right? It is not going to pay you a fixed amount of money every month. In fact, there is a high probability of a loss, right, on a month-to-month basis. So if you have loans to pay, if you have money, right, that needs, right, to repay someone, right, Forex trading is not the way out because it's going to make things worse, right? You might even excavate the loss to even a larger loss and you still owe people money. That's the worst kind of scenario to be in. That is financial suicide, right? So if you fall into that category, right, please, right, don't get involved with trading. Number two, right, if you're the person, right, where right now maybe you can barely survive, right? You don't have many debt, you don't have much debts, but you can barely survive. You can barely put food on the table. You have difficulty, right, paying for your kids' tuition fee. You have difficulty, right, giving your kids allowance. Then again, right, don't get involved with trading, right? Trading does not give you any assured guarantee. Like a job, right, where you have a fixed amount of money coming in each month, whether you screw up or you don't screw up too badly, you should get a paycheck coming in every month. But trading, okay, that's not the case. If you screw up, you don't get a paycheck. In fact, right, you dig a hole that gets larger and larger, right, if you do the wrong things in trading, right? So maybe you start off with a month with $500 in your account, you might end up with $100. You lose $400 a month, right? So that is possible in trading. So again, if you have difficulty putting food on the table, don't get involved with trading. So now, let's say you don't belong to any of these two categories. Maybe you're someone who have surplus capital. You inherit maybe $50,000 from your uncle. Maybe he strike the lottery, and you want to learn about trading. So how should you use that money? How much of that money should you put into your trading account? Okay, so my suggestion is this, right? If you are new to trading, you're new to this endeavor, put in as little money as possible. As long as it's enough to open an account, right? Just start with that. So for example, Forex, I think you can open with as little as $200 or $300. Start with that amount. Okay, don't put in that full $50,000, right? Because when you learn a new skill set, a new endeavor, whether it's cycling, motorbike, driving a car, trading, you're gonna suck as bad, right? The first time round, right? You will be at the worst, right? When you just started. Okay, so don't be a hero, right? I'm going all in. Well, if you go all in, right, guess what? Yeah, you're going all out after that, right? So don't go all in. You're just putting a small amount of capital to get your feet wet. And there are a few reasons for this. Number one, since you know you're gonna suck so bad right at the start, right? So even if you lose capital at the start, right, the financial loss, right, the nominal value of the money is not huge, right? It's like what, few $100 or maybe even tens of dollars. That is something that you probably can deal with it. And number two, you will make mistakes, right, at the start of your trading career, your trading endeavor. No one starts off perfect. No one starts off, nailing their trading plan with a home run, right, and executing their trades consistently, right, over the next, 50 or 100 trades for the first time round, right? They are going to make mistakes, right? Buy button becomes sell button. They panic, the sell button becomes buy button. They key in the wrong position size and stuff like that. You will make mistakes. So these mistakes, right, might cost you money. And again, right, why do you want to pay so much in this type of, tuition fees, right, when you can, pay as little as possible by having a smaller account size at the start? And also, right, another reason for this is that when it comes to money, right, you would probably not realize this yet, but different people, right, me and you, we behave very differently to money. Our reaction to money is very different because it largely depends on the way we are brought up, right, how we treat money, right. The more nonchalant you are about money, right, the more less affected you are if your P&L goes up and down. But if you're the type of person, right, that you are very, very, agitated when money is always on the line, right, then trust me, right, trading is going to be something that you would have to take time to adapt to it. Right, let me share with you a story, right. In my poly, right, the poly days, right, I have a friend, right, at one point in time, right, I actually owe him money. I owe him 10 cents, right, for some reason that I can't remember of. I just owe him 10 cents. And this guy is bugging me every single day. Hey, Rainer, where's my 10 cents? Where's my 10 cents, right? And being the mischievous person that I was, right, I just refused to give him back that 10 cents. And he bugged me every single day. Rainer, where's my 10 cents? Where's my 10 cents? And now that I think about this, right, if this person were to get into trading, I don't think he would do very well because he's too affected by the money, right? So at that point in time, I was a person that wasn't really too affected by money, right? And that was, my bad, my mistake on my part. I should have, just play with his feelings. But the story that I'm trying to bring across to you is that the way you behave towards money, right, will have an impact, right, when you're trading life. The more nonchalant you are about money, right, the more you can kind of accept the up and down of your trading account. The more affected you are by money, the more harder it is for you to, come to terms, right, when your trading account goes up and down, right? So again, I have no idea which category you belong to, so this is why I suggest you start with a small trading account again. So finally, right, the last thing, right, how much exactly should I put into my trading account, right? It can be like $100, $200, $300, $400, $500. How much is it? So as a rough general guideline, right, let me just give you an example, right? Let's talk about Forex trading since most of you are, wanting to learn more about Forex. So my suggestion is to put in an amount of money such that even if you hit a loss on your trade, right, it's not more than 2% of your trading account, right? So let's say, for example, you trade euro dollar. Your average trade size is 100 pip stop loss, right? Let's say you trade one micro lot, right? So that's about 10 cent a pip. So 100 pip stop loss with 10 cent a pip, right? That loss on the trade, if it hits your stop loss, is about $10. Okay. So now you've asked yourself, right? If I have a loss of $10, okay, how do I make sure that $10 loss is not more than 2% of my trading account? Okay, so if you just do some simple math, right, you realize that you need about a $500 trading account. So, such that if you hit your stop loss, right, which is about $10, it's not more than 2% of your trading account. Okay, get the idea? So now let's say maybe most of your trades are not 100 pips stop loss. Maybe your stop loss is tighter, maybe it's about 50 pips. If that's the case, right, then you don't need a $500 trading account. You can actually reduce it down to $250, right? Because with a 50 pip stop loss, right, and you're trading one micro lot, each loss is about $5, right? If you do the math, right? So $5, right? If that is a loss to you and you want that $5 to be not more than 2% of your trading account, right? You realize that you need a minimum of $250 in your trading account. So this is just one simple technique that you can use, right, to determine, right, how much money, right, should you put into your trading account for starters, right? And remember, right, you want to start as small as possible, right? Don't go big, right? Don't do it, right? That is not a very good idea. Okay, so hopefully, right, that helps. So with that said, I've come towards the end of today's episode. If you've enjoyed it, right, give me a thumbs up, right? Subscribe to my YouTube channel. The button is below. Click subscribe, and I will talk to you soon.